What can we expect from the altcoin market in the coming weeks and months? Welcome to Crypto Simulation Theory. I'm the Gaussian Snake. None of the information in this video is to be taken as financial advice. If you like content like this, be sure to give the video a thumbs up, subscribe, and also join my free Telegram group where we do daily crypto market updates and have lively, spirited discussions about things like the altcoin market, Bitcoin, and all other kinds of things related to the crypto markets. In this video, I'm going to do an overview of ETH Bitcoin. We're going to talk about total three others versus Bitcoin, and even get into the weeds of the stock market and things like the Russell 2000 and try to tie it all together to discern what the most likely path for altcoins is. And not only that, but look at past data in the stock market to extrapolate what might happen to altcoins in a macro environment like the one that we're currently in. Okay, so we're going to start out by having a look at ETH Bitcoin on the weekly time frame. Since Ethereum is the king of the altcoins and the altcoin market is very unlikely to do anything exciting without Ethereum doing reasonably well, although there are some exceptions to that. In general, you want to see a healthy Ethereum to have a healthy altcoin market. And we had something pretty significant happen earlier this year around March that hasn't happened in close to 7.5 years. So back in February of 2016, we crossed this. I mean, you could even argue that we, going all the way back to like in 2015, we broke through this line, could not hold it as support, and then broke through it again in 2016 and actually successfully held this as support all the way until March of 2024 when we broke underneath it. We tried to backtest it. I predicted on my channel that was going to fail. It did fail, and now we're coming back down. I think we are going to head to this 0.03 to 0.04 region, probably get there sometime within the next few weeks. I would imagine September at the latest, and kind of, find some sort of macro bottom for ETH Bitcoin so we can start to recover and head back up. And I think we'll be heading this way. I don't know how long it will be or if we will get back above this former long-term support trend line, or if we're about to hold it as resistance for years to come. That is something I'm not sure about, but I would imagine that as altcoins start to take up more and more of the space and take away market share from Ethereum, I do think this could turn into a long-term resistance trend line. I think that is actually quite likely. So enough about Ethereum. I want to actually get into the weeds with altcoins and look at what's going on with them and try to frame their behavior in the context of the broader markets and look at some key events that might give us some clues about what to expect from them. So this is total 3 minus stable coins, just USDT. It's sufficient to just subtract those out, divided by Bitcoin, which gives you a general idea of the strength of the altcoin market against Bitcoin. I drew this red zone in a while ago to indicate pretty fundamental horizontal support. We have broken down underneath that at this point. We are kind of getting towards, I think, a bottoming process for the altcoin market. But I'd like to look at some indicators to sort of, see what's going on in some more detail. So we still have a red Gaussian channel. We did try to get into it on the first attempt. It was unsuccessful. So we're probably going to spend some more time underneath it. Note that the Gaussian channel did inflect to concave up, which is generally a good sign, but this is just one indicator. It's a lagging indicator. I do think we are likely going to be putting in some new lows for total 3 minus USDT divided by Bitcoin. And this is not unprecedented. We could see that we, back in 2019, had a pretty significant breakdown below this red zone. And, we had kind of a little bit of a choppy altcoin season into late 2020, had a nasty capitulation, and then really took off. And I think we see something kind of similar playing out. Like here's sort of the attempt to test the Gaussian that failed. And I think we're going to see some kind of capitulation. I don't think it's going to be as dramatic as the one here, though. We do have diminished volatility, which I guess is a good thing. So you're unlikely to see the kind of volatility you've seen in the past. Something else I'd like to look at here is the 50-week whole moving average versus the 100-week whole moving average. Keep in mind, again, this is altcoins versus Bitcoin. Who cares about altcoins versus the US dollar? I don't care, because if my altcoins can't outperform Bitcoin, then why am I holding them? You know what I mean? So, and we don't have enough data to take this 100-week whole moving average back very far. unfortunately, because we don't have 100 weeks of data up until, mid to late 2019. But I think we can learn something from this. So just to review, whole moving averages are somewhat lagging, but less lagging than simple moving averages or SMAs. And because of their more current nature, golden crosses and death crosses do take on a little bit more meaning. So it looks like we would have had a death cross right here in July of 2019, and that does nicely correspond with this downtrend. And then we had a golden cross in January of 2020, which corresponds pretty nicely to this uptrend, another death cross in December 2020, followed by a golden cross in November 2021. I'm sorry, that was a death cross. A golden cross in April of 2021. Very nice times for the altcoin market. A death cross in December of 2021. A brief golden cross in November of 2022, and then a nasty death cross in 2023, a golden cross in October of 2023, and it looks like we're about to get another death cross. And I think when that death cross happens, as it's happening, you're going to start to see this move down. This is going to be a very bad time for altcoins if it plays out the way that I think it will. And so you can see that the altcoin market against Bitcoin sort of moves in different stages. And I can kind of list those stages out to you so you can kind of see. I think these stages are pretty reliable, even though we don't have a lot of data to sort of draw off of. We have sort of this like bear market stage where you get a really prolonged drawdown of altcoins against Bitcoin. And then you have a recovery stage. I'd call this recovery because to me, it's not a true bull run. And then you have the final flush out, and that final flush out leads you to mania, to the bull run. So let's see that again. We have the mania bull run, and then we have sort of this prolonged corrective phase. We ignore this little bump up here. And then we have recovery, which we're coming to the end of. And then I think we're going to see a really nasty drawdown for August and probably even into September before altcoins start to reverse course and we see mania develop. Okay. So I think that's something that you have to kind of keep an eye on. We should look at other indicators just to make sure. Gunnar EMA has a bearish cross. And this is very consistent with, and you're seeing the red and the green averages start to move away. The green is acting as resistance. So that's also kind of indicative that my theory is probably going to play out. There's really not a lot else that you need to look at. The SAR, this is the parabolic SAR, and this is showing you that we are in a downtrend right now. We've been in a downtrend for months. And this is not unusual to see this downtrend, but look at how the dots are a lot closer together, indicating diminished volatility. So I don't think that we have that much longer to go in this altcoin bear market against Bitcoin. I think it's coming to an end fairly soon, but I think the worst of it, the worst of it's over, but the worst of what we have to, the worst of what we've experienced, let's say since June of 2023, hasn't arrived yet, in my opinion. I think we are going to have one more pretty big scare for altcoins against Bitcoin, and then we should see things start to turn around in a more material way. This is others versus Bitcoin on the weekly time frame. It's not something I look at too often. I usually just look at others dominance. Really, this is total 3. It's very similar to total 3 divided by Bitcoin, but it's excluding the top 10 alts and including probably some more alts than total 3 looks at. Regardless, though, what I do find interesting is for the first time ever, and I've circled this, the Gaussian channel is turning red again. It's never done that before, where it usually goes green, red, green, red, green, red. And now, and then when I mean bull, bear, we're seeing it turn red. And this probably has to do with diminished volatility for the main reason. You can see that the altcoin market has been less volatile than it's been in the past, but it's following a very similar pattern. It's just like a lower amplitude version of what you see here. So like if I were to take, let's see if I remember how to do this. I want to take a fractal, I think it's bars pattern. I don't do this often, but let's see if it works. I'm going to take this pattern and just kind of take it over here and then, squeeze it down. God, it looks really similar, doesn't it? Like it's not exactly the same, but you can see how there's probably a final drop coming. So I think this turn to red probably won't take place over a very long period of time, but I do imagine we'll probably take out this low. at the very least retest it before we start moving up in a more material way. Gaussian is going to reflect this downward motion of the altcoin market. And we've done this before. We have a recovery, we have our bull market, bear market, recovery, drop, bull market, bear market, recovery, drop. So I think you're seeing this play out. I'm not going to get as in depth on this because this really doesn't look that different from total 3 divided by Bitcoin. It's kind of measuring the same thing. What I want to take a look at now is something that I think we don't really pay enough attention to, which is the backdrop of the crypto market, which is the broader market. And there was a fairly significant event that happened today with the Bank of Japan, or not today, but now yesterday. Today, an extended today for me. Yesterday, the Bank of Japan announced that they're going to raise interest rates by 25 basis points or a 0.25%. And this has some pretty significant implications. If we go take a look, I'm going to pull this up in a second at the, I guess maybe the US dollar versus the Japanese yen. Okay. I'm going to pull this up on the screen for you in just a minute. Let me share it with you. So if we take a look at, this is the US dollar versus Japanese yen, notice that the dollar has been falling against the yen. And what I want to do is bring this up against recession data to see if there's any kind of pattern that we might be able to find. This actually goes back pretty far. Maybe what I'd want to do is put this on a different time frame. Let's go to like a 2-week time frame. So if I pull this on a 2-week time frame, there we go. That's better. Yeah, this gives me a pretty clear idea of the way that the dollar has kind of been bowling out against the yen. You can see the dollar has been gaining a lot of strength on the yen since October of 2011. So for most of Bitcoin's existence, we haven't really experienced crypto, and this is a double bottom, by the way. So that's pretty bullish for the dollar, but we haven't really experienced a sustained drawdown of the dollar against the yen. So what could that possibly mean? So I want to pull up recession indicators here. I'm not really sure that we'll necessarily be able to find a pattern because, there is no one single thing that can predict a recession or can tell us, but the whole point of this is to try to match this up with what's going on in the altcoin market. Okay. So I'm not trying to get off on a huge tangent here, but generally speaking, during periods of pretty high volatility, we have seen recessions occur where the US dollar has either broken down against the yen or gone into here you can say this is breaking down. So when the US dollar breaks down against the yen, it does sometimes signal a recession. This is one of many things we should look at. We've had quite a few recessions over the past few decades, and there's definitely signs that another one could be coming. And I'm not trying to forecast a recession here on the channel. That's not the point of this. That's a fool's errand anyways. I'll leave that to the economists. But I am trying to sort of frame a discussion about how to approach altcoins in a responsible way. And that can be a little bit challenging to do if you forget about the greater framework, that environment. Bitcoin's never existed in a period where there's been a sustained drawdown of the US dollar against the yen. So with Japan doing quantitative tightening at a time when the Bank of England and the US Fed are likely to do quantitative easing, this could present a pretty anomalous situation for us that we don't really know how to handle or what's going to happen. So let's pull up some more data here. If I go to the recession indicator, this is a cool indicator. I can look at things like the unemployment rate. I can look at the yield curve spread. We'll start with unemployment. And what I'd like to also do here is pull up the Russell 2000 and kind of take a look at how the Russell 2000 has behaved with respect to unemployment and with respect to recessions. And the Russell 2000, for those of you who don't know, is sort of like the altcoin market for stocks. It is a huge collection of fund of small cap or index fund of or index of small cap stocks, index fund of small cap stocks. So let's go ahead and pull that up. So I think it's RTY. Yeah, that's what it is. I think what we'll do with the Russell 2000 is let's go ahead and put it in a new pane. That way we can kind of view this in a more, well, without too many things on screen at once. Okay. And you know what? Well, actually, what I think will make more sense to do is we don't really need to look at the US dollar versus the Japanese yen anymore. We can actually just look at the Russell 2000. So there it is, the RTY. Let's see. Give me a moment. Okay, I had to just adjust things. So this is unemployment rate, which we know is a leading indicator of recessions, always has been. And this is the Russell 2000, which is basically the altcoin market of the stock market. And the reason why this is significant is when the last shoe to drop in any bull market is going to be your most risky asset, right? Because people rotate capital from least risky to most risky. And I think another thing that I'd like to pull up on here are rate cuts too. So interest rates. Let's see if we can also pull up U.S. interest rates. So U.S. interest rates. See if it'll let me do that. It's being a little finicky with me right now. Okay. One moment. I'm not sure why it's giving me trouble. Oh, it's right here. Okay. Looking at it right here. So let's put it on a new price scale. Okay, this is getting a little bit messy, but I'll make this white. Okay. It's hard to remember all the different symbols for everything. So this is US interest rates, and this is actually going to give us an interesting picture. So if we look at what's happened with the Russell 2000, we think of it as sort of like an altcoin market. You can see that back in the 80s, we had this like very slow, gradual rise in unemployment. And the recession was declared as we started going up. The moment that recession was declared, Russell 2000 took a nosedive. Okay. And then as the recession was coming to an end, it started to recover. We go, and if we also look at interest rates, though, by the time we were in a recession, interest rates had already been cut for quite a while. So the Fed started cutting. This is back in the 80s. They started cutting, like, this was like almost 10% interest rates. What happened when the Fed started cutting? The Russell 2000 started rallying. So notice how the Russell 2000 rallied into a recession. And this took place over many months. This is on a 2-week scale. So it's actually a pretty long period of time in here. Okay. I'd zoom in, but I really don't want to lose this view. And then, interest rates bottomed out, unemployment went down, and the cycle kind of began again. And so you can see right here, interest rates kind of came to a head right here around 6.5%. I'm using paint here on the side. And once the interest rates got cut, it's a little hard to tell here. There was some green. We rallied into a recession, and then we kind of bounced around and had a final pretty nasty dump, bounced up here again and dumped even more afterwards. So recessions are not very good for risky assets. Okay. Rate cuts initially are good for them, but then eventually there's a reason why these rates were cut. And so once again, we have rates kind of similar to where they were at now. This is in 2007, and rates were cut, and you can see that the Russell 2000 rallied. Okay, after having a little bit of, there's like the Russell 2000 will have like a scare into rate cuts, and then it rallies out of it. Sound familiar? Sound like the altcoin market, right? And this was a particularly, this is the great financial crisis. This was a particularly wicked fall. So, rate cuts happened like around August of 2007. They were pretty steep, pretty aggressive. And stocks like that initially. And the Russell 2000 did well until it didn't. And it had a really nasty flush out. Okay. And then we've had some scares along the way. Now you're entering into like crypto's existence. So crypto's existence is right here. And so what I can do is I can pull up total 3. Well, it's not an indicator. Let's pull up here. So total 3. Okay, and let's put this in a new pane. And we can kind of compare to the Russell 2000. In fact, what I'm going to do is run a correlation study on the two. Okay. And so what we can see is that, okay, we have, let me find the timeline where crypto existed. Okay, so crypto came into existence around here. And you can see during that time, interest rates were pretty much zero. Okay. And the Russell 2000 was doing great. It was taking a major leg up. This index fund of 2,000 different small caps. And then what happened? Interest rates reached a peak in 2019, mid 2019 of around 2.5%. And Fed started cutting. They cut in June of 2019. 9 months later, we had a recession. Russell 2000 took a nosedive. Now, what happened in crypto during that time? Crypto also was doing very well, and then it had a nosedive. And more volatile. This is more volatile than Russell 2000. The same thing happened. The recession was not very kind, right? And who knows what would have happened if that recession lasted longer. Judging by the Russell 2000, probably not very good things, right? This probably would have really sent the altcoin market into oblivion for a while. So here we are again. What do we notice? Unemployment is very steadily, it's kind of flattened out, but it's heading up. Okay. It's kind of reminding me of the pace that it's heading up. It's very slow, right? This is often the last thing to go. What happened in 2020 was kind of an anomaly. You don't usually see unemployment go up that rapidly, but that was COVID. So we'll assume that the development of our recession, our probable recession, will be more like something here or here or here. So when rates are cut, and I think they're going to get cut in September, I anticipate that the Russell 2000 is going to go up. Okay, it may not happen, overnight, but I imagine the Russell 2000 is going to go up. And I think crypto will go up as well. The altcoin market will start to probably will have found a bottom before that happens, and then you're going to see the altcoin market start to go up. Now this is total three. This is not total three versus Bitcoin. It's just total three by itself. So we would anticipate that the entire crypto market will benefit from that increase of liquidity, but the Fed cut rates for a reason. And so the reason I'm bringing this up is to sort of ask the question of what should we do with altcoins? Because we've never experienced an environment quite like this before. I doubt interest rates are going to zero. So we have to keep that in mind, that crypto has existed in mostly a zero rate environment. And when it wasn't zero rate, when it was like this here or like this here, those were some kind of tough times for the altcoin market. Okay. The altcoin market didn't really do anything that exciting until rates were cut. And you can see that the altcoin market hasn't been all that exciting. Neither has the Russell 2000 during this time. But we're seeing unemployment start to trend up, and we know that unemployment is usually the last shoe to drop in a probable recession. Something else that I want to show you too that I found kind of interesting. Let's go back into here for a second. I wanted to pull up the yield curve. Okay, I'm looking at the wrong thing here. Meant to be this one here. So I want to look at the yield curve spread, take off unemployment. And this is kind of interesting too. Something else that crypto has, never experienced is an inverted yield curve this substantial. We had an inverted yield curve in 2019, and this was not kind to altcoins when this was happening, when we were coming out of that. And that uninversion of that yield curve, let me pull up the crosshairs, right in here, the uninversion of that yield curve. The altcoin market didn't really like that all that much. It wasn't until interest rates got super low that we saw altcoins really popping off in a big way. And now look at, we have higher interest rates, we have a super inverted yield curve. So we just really don't know what's going to happen. And if you look at previous yield curve uninversions, it's always uninverted into a recession. Now, sometimes it, like right here, it didn't happen right away. Or actually, this did happen right away. It literally uninverted right into a recession. Here, it didn't happen right away. The lag time between uninversion and recession was about, this is a 2008, so about a little over half a year. And from the uninversion to recession in COVID, looks like it uninverted like around September. COVID hit March, so about 6 or 7 months. So I have no idea when this is going to uninvert, but we could find ourselves. I could pull up data with the stock market, but I'm not going to do that right now because I make this video insanely long. But we could pull up, we could see that this uninversion it is probably going to lead to a recession. I can't tell you exactly when it's going to happen, but I would imagine maybe in 2025 sometime, bull market could get cut short by a recession next year. It could. Will it happen late in the year, middle of the year? It could happen. Could wait till 2026. I mean, who knows? But this is generally kind of an ominous sign as you start to uninvert. And remember, assets do rally into recession. So I do anticipate that the altcoin market is going to find a bottom fairly soon and then start to really, take off. Let me, I'm just realizing everything's colored white here and how confusing that could possibly be. Let me fix that really quick. So let's see, pulling the wrong one up. You may not notice, but I actually recorded this entire video before and recorded without sound. So I am a little bit tired and that is definitely showing at the moment. So let's change that to, I don't know, yellow or something, just something different. Okay, so there you go. That is the yield curve. And you can see right there the inverted yield curve that we have. So yeah, I mean, that's something to definitely consider. The Russell 2000 is the most similar thing we have to the altcoin market. And if you really zoom in on it, we could even do kind of a side-by-side comparison with Total 3, put them on the same axes. See, crypto's been around, well, the altcoin market's been around there. So let's pull up Total 3. I'm going to put it on a new price scale. Okay, so there's Total 3 overlaid. And I have so many scales here because I think there's just way more. Yeah, ignore these scales. Let's do a correlation study. I said I was going to do that. So I am going to pull up a correlation study for these. Let's correlate the Russell 2000 with Total 3. Okay. And what you can see, and let's pull this to weekly because I think we can get more data. Although, you know what, this is pretty good, but I think weekly is probably better. Let's do weekly. Okay, so it's a little hard to tell just looking at the graphs, but what this shows is that the behavior of the Russell 2000 has really started to become more positively correlated with the altcoin market since 2020. If you go back to 2017, 2018, there were some pretty significant periods where it didn't have correlation, negative correlation, okay? Meaning that if the Russell 2000 went up, the altcoin market went down, or if the altcoin market went up, the Russell 2000 went down. When you see the greens up here, that means that the Russell 2000 goes up and the altcoin market is going up. Now, recently we did hit some red on this because you might remember the stock market was going up during like the summer, early parts of the summer, but crypto was going down. And now we're starting to see it, it's still negatively correlated, but less so. Okay, so we're like a pretty weak negative correlation. I anticipate that we may start to see this correlate more as the year goes on and you see the Russell 2000 and crypto hopefully both doing well. But what this shows is that you can actually learn a lot from studying the Russell 2000, and you can kind of apply the same logic to the altcoin market, meaning that if you believe, and I'm going to, switch the view here for a second, but if you believe that a recession is imminent, and we're not here to try to predict one, we're just looking at conditions that are sort of setting themselves up in ways that are similar setups to what's happened before recessions that have occurred in the past, which is you have foreign currency markets like the Japanese yen, which has pretty much been at zero interest rates for God knows how long, and they're doing quantitative tightening at a time when countries like us and Bank of England are heading towards quantitative easing. You have to think, okay, That's happened before, and when it's happened, it hasn't generally been a great thing if it's gone too deep and too far, where the yen has started to outperform the dollar over a longer period of time. Initially, it's going to be good, but after a while, it might not be so good. So that's something we got to watch closely. We also need to look at the Russell 2000's past behavior and look at what's happened after rate cuts and how long the Russell 2000 remained bullish before it had a really nasty drop into a recession. I think that could catch a lot of us off guard. And so what I'm thinking, and this is not financial advice, is that at least for myself, I think I'm going to be a little bit more aggressive with profit taking as soon as we get into an altcoin season. I'm not going to assume that we're going to have a spectacular second altcoin season beyond this one. Let's say we get an altcoin season in Q4 of this year, heading into Q1 of next year. I am going to be very cautious about just assuming, oh, you know what, altcoins are going to pop off late in the year, because what if a recession hits and cuts our bull market short? It's something that could happen. Okay. Markets generally go very manic into a recession, meaning that they're going to go up quite a bit. We could see a build up to a very spectacular altcoin season, and that could be the last altcoin season that we have for quite a while. So it's just something to be aware of. And what's the worst thing that could happen? So you take profits a little bit too early, the altcoin market pulls back, and you think it has more life in it. You could reinvest those profits and compound your gains. So I think it's important to consider the possibility that a recession could be coming. Don't get yourself all worked up about it, but develop a more aggressive profit-taking strategy to protect your capital in the event that we do see something like that. So I think it's like important to sometimes consider things like the altcoin market in the greater context of the broader markets, right? The stock market, because we can learn a lot about what the altcoin market is likely to do from the altcoin market of the stock market, again known as the Russell 2000 composite index. So I'm not a stock market expert, nor am I well versed in Forex or foreign exchange currencies, foreign currency exchange trading. I'm not an expert on either one of those, but I know just enough to share what I shared tonight. I'd advise you go out and do more research on your own, and let me know what you think. Let me know in the comments if you agree with me that the Russell 2000 is probably a good model to use to compare to the altcoin market. And you can just leave a comment about that. So thanks for joining me in the crypto simulation tonight. Again, I'm the Gaussian Snake, and I encourage you to join my free Telegram group, the Snake Pit. I got links in the video description. We can discuss this more there. And if you have alternative views, or you disagree with something I said, or you know more about the stock market than I do, which wouldn't be surprising because, again, it's not an area of my expertise, leave me some comments and let's get some discussion going. So thank you so much. Be sure to give this video a thumbs up. Any comments are appreciated. Subscribe to the channel if you want to have more content like this delivered to you. And we'll see you again next time. Take care.